Alright, welcome to today's live stream on the weekend. Got there in the end. What we're going to basically be talking about today, the markets are not open yet. We've got a few hours before the market opens for the new week. So what we're going to do in today's live stream, there's a few things we've got to do. We kind of set the scene yesterday into yesterday's live stream. Go back and watch that after the stream if you want to. But just to kind of give you the rundown, we're going to be focusing on about 4 different things. The first thing we do on the weekend is we basically take a break. Okay, we pretty much did that. We go away from the charts. We don't look at it anymore for a little while before we come back before the market opens again to get prepared. The second thing we basically do is we review. Then after we review, we basically get ourselves prepared, wherever that is, whether that be looking at fundamentals, some of the technicals, and then we finally wrap up by looking at what the charts are basically doing, where the markets are going, where we think the markets are going to go, where we're looking to take trades from, all of those different kind of things, so we can capitalize once the market opens. We start trading tomorrow. So that's what we're going to do. We're going to basically break down the charts in today's live stream. Before we do that, there's a couple of things we have to do first, just to kind of set the stage for you. We're going to be breaking down basically 4 or 5 currencies in today's live stream, as long as there's time. So let's get straight into it. First thing on the list, we kind of highlighted already, you have to take a break. We've done that basically. We did that for most of yesterday, just apart from the live stream that we basically did yesterday, a quick one basically just to kind of set you up. So what we're going to do next is we're basically now going to review our activity, and we do that by basically looking at our previous week's worth of trading activity, and we're basically going to do that in real time. If you haven't been following us in the recent live streams that we've been doing pretty much every day, go back to our channel. You can watch the last 2 or 3 live streams that have been on the channel basically. So this is what we're going to do. You can see the business plan template, the Forex trading journal, whatever you want to call it. This is the one I'm using now for this test trading account for my private students. If you want to basically get this same thing as well, there's a link in the description box for you to get a copy of this as well, with the pre-coded formula that will basically see in action in today's live stream. So we're reviewing first and foremost. So by reviewing, what are we going to do? This is something that most people don't realize. This is a mistake that a lot of traders make. A mistake that a lot of traders make, because what they basically do is the market closes, they go about their business, whatever they're going to do for the week, and then they come back to start trading again. This is a fundamental part of Forex trading, and before we're going to get into the charts, these are the kind of things we have to zone in on. Now I know some of you watching are not going to be interested in this, some of you are going to be watching and kind of check out, and likely because of these kind of things, you're not going to make money trading the Forex markets. These are the hard things in regards to Forex that most people mess up with. They don't put the man hours or the woman hours, however you want to categorize it, in to learn how to trade the Forex markets. This is where the money is made. We talk about this all the time. I continually say this, consistently say this. This is my best Forex tool. Whenever I use this, money comes. Whenever I stop using this, the money goes away. We've done a video about this as well. It's in the link in the description box as well for you to watch as well after the live stream. But so what we're going to do here, so there's a couple of things. We're not going to just go through an exhaustive list of all of the things you're supposed to do per se, but let's just look at the trade activity first and foremost. So last week we took 2 trades. Now the key, as you can see here, basically in this section here, basically highlights that green is a winning trade, red is a scratch, a losing trade. Okay, so the first trade we took on this practice trading account, I say practice, but bear in mind this is actually a live account with real money. Okay, just live with less money than usual, I'd say. We took a losing trade first and foremost. We've got our trading rules here, all here on the side, as you should be able to see, as I've highlighted it. We've got the currencies we trade. We've got like the whole setup, why we're doing this in more detail, in a short summary, the strategies we're going to be using with this trading account, who we're going to be trading with, who we're not going to be trading with ultimately as well, the operations, what machinery, what equipment, where, etc., and the finances, how much money we're putting into this trading account. So what we basically saw here is, let me do this. let's do this. Okay. So what we basically saw in this particular, what we can see here is just the first trade. So these were two trades. You can see we've got the date here in both of these trades. We've got the time. Now I'm pretty certain that most of you watching this, based on the odds, are not making money right now, or at least not making the kind of money you want to make from Forex, the Forex markets. And as I begin to go through all of these things, just take notes, understand the things I'm doing, understand the things I've put down, the things I haven't put down. So right from the get-go, I know the date of the trade I took, I know the time of the trade I took. So I took this first trade at 2:40 p.m. The more data you have, the more truthful it will allow you to be with yourself, and then ultimately on top of that, the more you can kind of like hone in and shape like your journey to success in regards to Forex. Okay, so what do I mean by that? So we can get so granular with this, we can like dive so much deeper than the tip of the iceberg into the surface. We'll start to realize that, okay, cool, maybe on certain days of the week are when we are more profitable. Okay, what do we do when we understand that? We start to focus more on that time and cut out more the other time. We can now start to see that, okay, cool, certain times of the day I'm more profitable, certain times of the day I'm less profitable. Okay, cool, what are we going to do? Let's segue closer to the time of the day based on more and more data that we have to trade in those particular windows. Let's move away, let's segue away from those areas where we keep trading based on what the data says to us. We're not making this up, we're not doing this based on emotion, it's logical, it's all based on the data we've tracked, and we can say, okay, cool, let's stay away from those kind of trades. Now we're looking at the currency. This is the market. Okay, both of these trades were on the pound against the dollar. We did in the live streams most of our makeup from basically the pound against the dollar, so that was kind of how it panned out. You're gonna see in today's live stream, when we get into the charts, how we're gonna break down all of the different currencies we're going to look at, and then it will make it much more easier during the week to actually capitalize on those particular opportunities. So now we have stake. Okay, and bear in mind, most of this stuff here is going to be contingent as well on the trading rules that we have here to decide. Okay, so we have stake on this particular trade. It was 0.4 stakes. That's 40p per pip, which is a standard. For those of you just think about it in that terms, we call a standard lot in trading 10 units. So whether that's $10 or £10, etc. Then we have a micro unit, a micro lot, which is 10% of that, which would be £1 or $1. Then we have even a macro, which is less than that, which is 10 pence or 10 cents, however you want to categorize it. This would be 4 macro lots basically. In a sense, it's 40p a pip, which is probably about 45-50 cents now based on where the pound is right now. But 40p per pip on this particular trade, this was where our stop loss was. So why is it important that we know what our stop loss is before I even jump forward? We know it's important to know the market, obviously, so we can now ascertain how good are we in particular trades in a particular week, and then a particular month, in a particular year, etc. Okay, then we go to stake. How much are we risking? The reason this is important, because what you can see right here, lot size, okay, which is calculated based on, as you can see, it's calculated on this particular number right here divided by whatever my stop loss is. So when I double click on it, you can see it's divided by, I put it generally to 12, as you should be able to see, but we can change that as we want. So for example, if I want to change this to a 20 pip stop loss, all I basically do is I take out the 12, add 0, and it's 20. Now I know that I can have a lot size of 60 pence per pip, if you're going to round it up or round down, basically with a 20 pip stop loss, that will be ascertained. If I want to change it back or change it to something different, let's say we're going to do 10 pips, then okay, cool, I can have 1.3 units per lot trade on a 10 pip stop loss, etc. But let's just keep this as 12. That's a nice good number for me in regards to the kind of stop losses I want. So we want to know, in this particular trade, were we necessarily putting ourselves in a position where we were basically risking the right amount, or did we try and put more risk on the table per lot per trade than we were supposed to. That's important, because then we'll know more and more, okay, are we actually following our rules, or are we dissenting from our rules? And you'll consistently start to see a theme that, look, when I don't follow my rules, I usually lose money. And you'll start to realize when I follow my rules, I generally consistently make money and stuff like that. And it's kind of something that will kind of just continue to slap you in the face and say, look, when you follow, you get profits. When you don't follow, you don't get profits. And at some point, the bell should go off in your head, in your brain, and say, you know what, I need to focus on this. This is the same thing that happened to me. Okay, it wasn't about profits, it was about like getting to break even. I'd normally lose money, okay, just through reckless indiscipline, okay, undisciplined trading. And then what would basically happen is, I'd know, okay, look, you know, I need to buckle down now, I need to sort this out, because if I now mess up again, then my trading career is over. Then I'd be able to get back through a lot of disciplined trading back to break even. I'd basically recoup all of my losses. And then I'd be like, you know, yeah, I'm going to be right, I'm going to do right, all these kind of things. So what would happen? I'd go all the way back down. Then I have to be disciplined, get back to break even and go back down. It was the final time. This doesn't mean I didn't lose money ever again. This doesn't mean I didn't ever have drawdown again. But this was the final time where I said, you know what, I'm sick and tired of trading my butt off, basically, for lack of a better term, to get back to break even. And then having all these hopes and saying, you know, yeah, I'm going to start making money now, and it not materialize. And I kind of just said, you know what, follow the data. And this is the mistake so many people make, but because they can look at this now, this is just from 2 trades, okay? Think about how much data we can have and how optimized we can make this when we've got more trades. And you'll see as time goes on, as we continue to share this stuff, God willing, okay? But so many people make the mistake because it starts with a blank page. And they're like, okay, like, what am I going to do with this? Israel says this is his best tool. Israel says this is the tool that helps him make consistent returns. But what is this? This is blank. And people never start, or they never take it seriously, and they never get to realize how powerful it is. Okay? This is why we charge money for our personal tool that we let people have from the public. And I do it unashamedly because I know how powerful this is, I know how valuable this is. But you're only going to realize that if you actually use it. Okay, so you have to actually take the trades, you actually have to log the trades, and then after you do all of those kind of things get better. Okay, but it takes time. And most people want the cheat code, they get rich quick, they want the magic formula, and that's why they lose even more money than we charge for our kind of products and materials, because they go off and pay someone that is just selling them a dream that they're never going to actually realize, and they've spent much more money on a strategy or some magical indicator that doesn't even give them what they want in the first place anyway. Okay, so you just have to bear that in mind when it comes to obviously trading the Forex markets. Let's do this next. Okay, so we've talked about lot size, now we go to max risk. My max risk on this particular trade was supposed to be £12, and again, just similar to the whole lot size here, we're basically trying to identify, okay, cool, did we risk more than we were supposed to, or did we risk less than we were supposed to, etc. I write down here what is my minimum balance. This right here, up here, is the current minimum balance based on the current total account in the trading account. This is obviously pre-coded. If this changes, then you can see all of these things change here as well. So as your trading account goes up and down, you just literally change this box right here, your total, and it will basically show you and say, okay, cool, based on your total, this is basically how much you've got in your account. This is how much your trading account right here can not go lower than on any given trade. This is what your max risk should be, as you can see right here, and this is the lot size, okay, that you can trade with based on your stop loss, that you can change, like I showed you already, anytime you basically want. Okay, so we want to know all this information, this minimum balance. So this was the end result of this particular first trade. It was a £12 loser. It was a minimum risk of, or maximum risk of 2%, which we say don't risk anything less than that. You can see right here the first trading rule, as you can see right here, don't risk more than 2%. So we stuck to our rules. Now as we continue to go further, we can see more stuff here. So look, what type of trade was this? And we're now starting to get into more insight. So I'll even show you something as well as we go through this even more, how if you're really smart, you can get around your trading rules. And this is why you need to put your trading rules in a certain way, so you can not allow this to happen, basically. So why did I enter this trade? So what I basically wrote here was, look, this was a sell from a key area which is in line with momentum. So I'm not going to spend all of this time. We do this in our Forex course, where we break down the strategy in more detail. That's obviously a paid product. I'm not here necessarily trying to sell you that product, but the point I'm trying to make is, in the previous live streams we've done, you can kind of you can learn more about what the strategy is. It's not going to go into as much detail as the course, which we obviously charge money for, but like, I'm trying to get you to understand this so things don't just seem a bit like out of the blue for you. Okay, so this is just basically one of the strategies that we've kind of highlighted out here, which you can see. But basically, I was selling from a key area. I literally broke this area down in the live stream, I believe on Thursday. Okay, then if I've got any notes, I didn't put any notes on this trade right here, and then you can say, cool, look, did I follow my rules? Now, I followed my rules, yes. Now, if you go back, I haven't put it in the description box. After the live stream, maybe I'll put it there, to Thursday's live stream, where I basically set up this first trade, like this whole, I want to trade from this particular region, or I want to see what happens at this region to potentially open up a trade. I highlighted that on Friday when I came back into the live stream and literally broke a lot of this stuff down in even more detail about the trades I took. I basically said that the market came to the area and it wasn't really the best setup for me, in all honesty, in regards to how I actually take trades. So yes, I did follow my rules, but the technicality or the loophole kind of that I was able to jump through is, in the rules that I've actually put in this particular trade journal, business plan template, is I didn't put anything about necessarily the entry. And what I may do going forward is I may add another trading rule which says, look, you can only get into this trade if it meets the requirements in regards to how you enter the market. Okay, so that's just like nuance I'm giving you there for free in today's live stream, so you can understand how you can even deviate. I'll just leave it like that. So let's move on now to the second trade. And what we'll be doing as well is we talk more about, we literally go to the charts. So what I'll do is, let me go to the charts. I'll do this briefly. The reason I don't want to do this for too long is because we did this on Thursday and we also spoke about this, okay, in the live stream on Friday as well. Okay, so let's do this. Let's first zoom in a little bit so you can see this in more detail, and we'll do this. All right, so the trade I took, this was the area right here, as you can see, this area in this particular region. And what basically happened was price shot into the region, and basically in this particular window I basically entered the market. Now, full disclosure, I said it at the time, that really isn't how I entered the market. That was basically a bad trade that I really shouldn't have taken, but we took it nonetheless. So what we basically do is, I'd say, okay, let me go back to the journal and let's do this. I could put notes on the trade if I wanted to, as we can see here. But what I could also do is I can say, okay, notes from weekend analysis. I know that's a bit small. Let me make that a bit bigger for you. Let's see. Okay, and let's make it black. Alright, so that's on weekend analysis. And what I can basically do now is I can basically say, let's do this, make it simple. Alright, so now I can basically say, you entered this market on your first trade very prematurely. You normally would look to see better formed candles. Let me make this bigger as well, just in case you can't see this properly. It'll be better to see even bigger. Okay. And what I'd basically do is I'd begin to just break down more stuff. Okay, so I enter this market and I can say, look, this was from the right region. Okay, the place I entered the trade was from the right place where I did my analysis, but I entered the market too prematurely because it wasn't really the way it should have been in regards to the setup. Okay, so now what was basically happening is, as the week goes on, I can look at this. As I'm looking at this on the day, I can say, okay, cool, last week I basically entered a trade too prematurely. So what do you think I'm going to be doing this week? I'm going to be saying, okay, cool, don't enter the market prematurely, because what happened when you entered the market prematurely? Okay, look at the red. It's highlighted in red. This is what happened. Okay, I lost 2%. Okay, so these are the kind of things. What else can I say? I could say, make sure you keep your rules in check. Or what I could say is, you found a technicality in your trading rules about entries. So again, this is stuff that we're doing and we're looking at and we're saying, okay, cool, this is how we do it. We protect ourselves going forward by the mistakes we made last week. I noticed that I entered the market a bit prematurely. I'm noting that down. So when it comes to my trade activity going forward, I'm going to look at it and say, okay, cool, this was the issue, this was the reason, this was the problem I had. So I'm going to try and stop doing this going forward in this particular trade scenario. Okay, and this is an example, shows you that not everyone's even perfect. So I'm going to say, look, in this scenario, this was a mistake, this is how I'm changing it, etc. Now what we basically do is, let's go to the next trade. Now what we can continue, we can put it on the next line, we can continue down on the same line, but we can say, okay, cool, what happened? So on this particular trade, well, we can see first and foremost the key is green. It was a winning trade. It was also, and this was a trade on the same day, 9th of March 2020. This trade was like an hour and a half later at 4:10 p.m. Okay, cool. So already from last week we know that later in the day was more profitable than for me. Okay, cool. And this is just from the preliminary data we have so far based on 2 trades. Now this was on the pound against the dollar as well. This was not a 40p per lot per pip trade, it was a 50p. So we actually risked a little bit more on this particular trade, 25% more basically from than the previous one, and this was our stop loss. Okay, they will say our max risk was 11.76. Why was it less than £12 even though we had more money? Well, why? What did I say previously? Well, this would have changed from 600 to about 588 because we now lost money. We don't say, okay, cool, this is our account balance to start the day. No matter what happens after one losing trade, we keep it. No, this is flexible. So after I lost that trade and I went into the trading journal, I switched the account balance to 588 or whatever it was, and just look what would happen if I go to 588 now. You can see, okay, max risk is 11.76. So this was my maximum. This was the max lot size I could have based on the trade. I believe this trade ended up having a 20 pip stop loss or thereabouts. So it's variable, but you get the point. You should hopefully get the point I'm trying to make here. So it's basically showing you specifically what to do. So then let's do this. Let's see. All right. So what happens next is you say, okay, cool. This was the max risk. I didn't go above that or above that in regards to the trade. This was what my minimum balance could be if I actually lost this trade, which is 588, which would be the account balance minus another 2% loss, etc. This was the end result. It was actually a profit of £78.35, which is about $85 thereabouts these days. And this ultimately was a 13.3% return. So ultimately I was risking this to make this. Okay, I was risking this 2% and I made this. Now why is that? That's because you can see right here, the second rule here in my trading rules is I need to have at least 3 to 1 or 1 to 3, however you reference it, risk to reward. So if I risk 2%, I need to make at least 6%. But we use this as a basic. We did this in our video. We talk about this. We break this down in our video, in amongst other places. We also break this down in our free on-demand workshop. There's a link for that in the description box as well, where you can learn about just basically how I trade and make profits. Basically, how I got into the Forex markets, how I started, how I learned all these different kind of things, the strategy I use, the sequences and tools and the stuff I used, and the formulas I use, like this, like what we're talking about today, in order to make profits, basically. So that's in the description box. We also done a video about how to make 4,000 a month trading the Forex markets, any currency, dollars, euros, yen, pound, shekel, lira, Mexican peso, the drachma, whatever it is, Moroccan dirham, any currency, 4,000 a month. Videos in the description box as well for you to watch after this video if you haven't watched it already. But 3 to 1. But you can see that even if I'm going for 6%, that's just the bare minimum, and that's what I basically explained in that video, and obviously in the free Forex workshop as well that you can watch at any time of the day if you want. It's on demand for you. And basically what happens is I know that I can get much bigger trades. In that video, in the live, in the on-demand workshop, we also talk about basically making a 10% of profit a week. And in that example, the highest I go to is 10% pretty much. But you can see here, this is a 13% profit. So it's more than doable. It's just about doing it from the bare minimum. At bare minimum, I need to make 6%. But as you can see, I can make even more than double the bare minimum. It's just about the week, how I'm feeling, my confidence in the market, the confidence in the trade, all these different kind of things, etc. Okay, so this was a good profit. Obviously, wiped out the previous loss and took me into a percent plus more profit than what the end weekly target is. And I'll use this opportunity now to segue into something really interesting. As you can see right here, it basically says, look, this is the last trading rule. My profit target is 10% profit a week. Now, what I'm going to do is I'm going to do something really interesting. I'm basically going to turn around and say, I want to do this. I want to say to myself, okay, look, right now there's a lot of volatility in the market. There's a lot of potential to make money. Don't make the mistake of forgetting that. That also means there's a lot of opportunity to lose money. We're going to try and limit that and protect ourselves in a lot of different ways. We're going to do guaranteed stops, which is something I may talk about during the week come ahead, and get into more detail about that as well. I was talking to some family members about this yesterday. I guess in a different context, I may talk about this, like I said, publicly in the coming days as well. Because I haven't really talked about that much over the years in regards to trading, because I never ever really paid any attention to them or used them in any sort of seriousness. We're going to make sure we're sticking to our max risk, is something which we kind of just talked about already. We're going to be limiting our trading activity, which is something we've talked about previously in live streams, and we'll continue to talk about this at other points as well, so just bear that in mind. Those are different things, but the point is, the reason I brought this all up is because 10% 10% is generally the profit target. But in my mind, I'm saying, you know what, there's a lot of volatility right now. I want to increase this. Okay, so what am I doing right now? I'm potentially changing my trading rules for this particular live trading account for my private students. So what I'm going to say is, notice what I do. When I want to change a trading rule, what do? Do I just say, okay, yep, I'm changing, this is it? No. What I turn around and say is, I give myself a week, like, cooling off period, basically. This is professional. This is how you do it. You don't just have a whim and then just change it. Okay, no. You say, look, I'm going to do this on a week bet, and I'm going to observe this for a week. I do this with currencies I trade. I also do this with rules. I basically turn around and say, okay, cool, this is a rule, I want to change, I want to amend, I want to do these kind of things. Let me just think about it for a week. Why am I doing this? Why do you do this, Israel? I do this because I don't want to make emotional decisions. I don't want it to just be, okay, oh, you know what, I made a big profit last week. Now, because of that, I'm just going to change everything and try and circumvent all of the hard work I've basically done over the years to get to this particular point, okay, in regards to just the trading setup that we have. So I'm going to say, let me wait a week. So this is me saying, okay, cool. Over this period of a week, if I have another good trading week and I make a 10% profit really quickly, and I just see that the markets are moving really fast and giving you a lot of opportunity, then next week I'm basically going to initiate that. Oh, Israel, but what if you miss out on so many different potential trades this week? So what? You need to understand, this isn't get rich quick. Just because you can make a lot of money in this game and this industry, think long term. This is something, God willing, that you can do for years and years to come. So why are you going to basically try and get rich in one day when you've got potentially years and years to come for you to do this? You have to use wisdom in regards to doing this stuff, and that's obviously what I do ultimately. That's the most important thing. Okay, so as we go back to the trade journal, let's look at this. Look what it says. This is trade rule number 7. I kind of referenced this already. My list can only be changed after a 1-week review process. Okay, so I have to review the currencies I trade, the rules, all these different kind of things before I can make those decisions. All right, so let's continue with this trade, the second trade that was a winning trade. Now let's look at the type of trade. So what was the type of trade? Well, the market moved down over 100 pips, back down to my previous area. It is now stopping for what seems to be an opportunity to jump on the downward volatility to initially scouted out targets. So just to keep that simple for you, for those of you who are just thinking, what on earth is he talking about? Let's go to the charts and I'll show you specifically exactly what I'm talking about. So basically, in a nutshell, excuse me, let's see. So price, basically, like I said, enter the trade in this particular region. Price basically then ended up stopping me out in this particular region. And then what basically happened next is price shot up about 150 pips. Price shot all the way back down, basically 150 pips. And as price was in this particular region here, let me do that again, that was terrible. Much better, but not the best. As price was in this particular region there, basically what happened is I basically said, okay, cool, let me now take a sell position. You can see huge downwards momentum, this particular candle here. Then after all of that, we see this candle, which was a bit of indecision. And as this candle was closing and the next one was forming, if I remember correctly, I got in right in this particular region right here. Okay, and then after all of this stuff, you can see price basically shot all the way down to my target, which was right in this region. This is how I actually got taken out for a profit for over 150 pips. It was about 153 pips basically, and that was the trade. So what I was basically highlighting in the journal was, look, price is now shot down back into this region, because this region right here was where I was drawing up on the analysis saying, look, this is where I want to see what price does, and in this particular region is where I want to basically take a sell position from. Price false broke out, it broke out falsely to kind of throw people off, so it just came out here just to kind of fake people out, oh yeah, it's going up, no. Then moving it straight back down, which is a common tactic from you know who. Okay, we talk about that in the free on-demand workshop session. Again, it's in the description box. We talk about it there. And then I entered, and subsequently price shot all the way down. Now this is kind of like a quick run through. There are more like profitable breakdown which will really help you make money trading the Forex markets based on Friday's live stream. It's not there right now, but I'll put a link in the description box after the live session, if I remember, to Friday's live stream for you to watch, because it will be very, very beneficial for you. Okay, but that was the reason. So now I said, because I entered this trade, because it's back in this particular region where I'd actually scouted out from, you kind of ignore this to a certain degree. I'm now going to take a trade in this particular region that I've highlighted here in the green circle, and I'm going to now take a trade with the target back in the previous scouted out areas of profit taking, because this is where this green line here, where I basically said I want to basically take a trade from to basically and feel comfortable. And as you can see from what we saw, this is all that price about 50 pips more. This was like price went there and actually went 50 pips below as well anyway. So just bear that in mind. Okay, so that's just something of importance for you to understand. So this is obviously how we were actually following our trade rules to a T. Let's go back to the journal that breaks it down, and we're going to break down the charts even more. And then yes, I followed my rules in all of the different ways. Okay, so what does that tell you? A key lesson, or let's write more notes. Let's say make sure you don't make sure you keep confidence despite losing trades. You can always, this is a money lesson right here, gold nugget lesson. You can always cover multiple losses with one good trade. I was telling this, I think, to a couple of my brothers yesterday. I was basically saying, look, because of that one winning trade, because of this one winning trade right here, okay, 13% profit, how many full starts does that give me? How many scratch trades does that give me to play with? That gives me 6 plus. I can lose the next 6 trades, and that would take around 6 trades, maybe 5 trades if you want to just keep it completely consistent, to get me back to the starting balance. So now how much more relaxed am I? Because I know that, look, I'm not going to be silly with this and say, you know what, I'm just going to just trade recklessly. But I know, look, you took one good trade, and I know even if I have 1, 2, 3, 4, 5 losing trades in a row, I don't want to do that, but I'll know, okay, because I kept the faith, because I kept confident in my trading activity, I can do this better. Now this is interesting because I kind of did a video about this recently. It's like having faith in yourself. Now as a Christian, this is something that, not necessarily having faith in myself, but this is something that you have to practice on a daily basis, having faith in God and stuff like this. So the video I'm talking about is, I did a video a couple of months ago. It was about 2 key lessons you need to be successful at Forex. It's in the link in the description box if I remember correctly. It should be there. If not, just check our YouTube channel for videos we've done this year. It was early, probably a few months ago. And I'm basically just talking about 2 characteristics of just my Christian faith that really have helped me over the years in regards to trading. Okay, so it's important you understand you have to continue to have faith in yourself no matter what the circumstances are, because ultimately there's going to be trying times. Even in winning trades, there's going to be times when you're winning trades, if you are basically fearful, you won't put yourself in the right position to actually make money. So just bear that in mind. So we've basically broken down now what to do in regards to activity. We can put more stuff here, we can put less stuff here. It's however you want to do it. Now that we've done this, we can say, okay, cool, we've drawn up some information, we've got some data. Now we say the next thing we need to do is we need to go forward now and basically take this one level deeper, and that's now by basically preparing ourselves for what's to come. And we do that by what you should be able to see now on screen. Now we want to look at some fundamentals. Now you want to do this in a way where you should be doing this every day before you start trading. Okay, but at the same time you want to do this on a daily, every time before you start trading, but you want to do this on the weekend as well, and you want to make sure, okay, cool, let me prepare myself for the week ahead. What big information is coming out? You can see on Sunday there's no information, there's no scheduled. I want you to understand that there's no scheduled data. We're not talking about unscheduled data that can just hit the market anytime. There's limited amount of stuff you can do in regards to that to a certain degree. You can have a live news feed in just when in the open hours. They can basically be giving you the real-time news in real time, which is obviously a benefit. You can check on like social media, Twitter, you can check like different news feeds, which will be a bit later. The audio news feed is probably going to be the best. It's not there now. If you want this on a replay, I'll put a link in the description box to just the common live news feed that I generally use. You can get that if you want. It is a fee, just for the record. If you can't or you don't want to pay for it, there's different ways you can find like someone that can get it for you, like a broker, for example. Some brokers give that away for free. There's different scenarios you can do that, just for the record. Okay, and let's look at, so now Monday, this is a number line system. You've got red, you've got yellow, you've got orange. Now really and truly, just to keep it very simple, red is the ones you want to watch out for. Like, I'm not saying necessarily ignore yellow, ignore orange, but if you're going to just focus on one thing, you focus on red. Okay, so you can see Monday there's no red, Tuesday there's some red. You've got some news coming out of Europe, you've got some news coming out of Britain, some manufacturing numbers. We've got flash manufacturing in America on Tuesday as well. We go to Wednesday, which is, I'm not going to be trading on Wednesday. Wednesday is actually my day off where I just basically try and rest. It also happens to be my wife's birthday this Wednesday as well, so that's even more incentive not to trade and obviously just take time off. But you've got some information coming out of Germany, you've got some more information coming out of the UK, which is red. Thursday, I'll be back for Thursday, God willing, and we've got some really important news coming out of Britain, which is really interesting because there was a lot of news. You had QE, market manipulation information coming out last week in regards to the pound, in regards to different currencies as well across the globe. So you have to bear that in mind as well. This should be really interesting and should be something you factor in when it comes to what you're doing. And Friday there's no red as well. Okay, now again, you could do this in much more detail. Right here you can see it tells you the time. Okay, it tells you the day first, then it tells you what time it is, then it tells you what currency it's related to, then it tells you the impact, like I talked about, the numbers line system. Is it red, is it yellow, is it orange? Something you think about. It gives you information about what it is right here in the text region. You could do here, you can click on this, it will give you more detail. This is forexfactory.com, by the way. Pretty much I use this, I've been using this since I began to start trading. It's not, I'm not saying it like a special, loads of places have economic calendars. Your broker probably has an economic calendar. This is more so due to habit since I've been using it, and it's whatever anyway. It will tell you the forecast as well. It will tell you the actual in real time. After it's done, the actual will be here. It will tell you the forecast. It will tell you the previous figure, so you can kind of compare. You can compare what the actual figure is, but this is where we talked about already about the whole live news feed. Whereas it will take some time for them to update this website. The live newsfeed will say it real time. This is the number. This is the figure. This is the important piece of data. If someone's speaking, for example, like the president or the prime minister or the central bank, the European Central Bank president, for example, something like that, will say something, and then the person will actually be saying it out and stuff like this. And then but at the same time, you can actually watch these things in real time. You can literally put on like Bloomberg or whatever website is or what's it, corporation it is that is going to be distributing these things. You can listen to them in that platform. You can go to the ECB website, for example. You can go to whitehouse.org or whatever it is where they're playing the live stream, and basically you can hear it in real time. If you don't want to do that, then a live news feed will be kind of like the next best thing. And then somewhere like this, which is going to fill in the data, or somewhere like social media where they're going to fill in the data, would actually be a benefit to you as well. And there's loads of other stuff. There's graphs and all these things about how things have actually changed. But just to keep it really simple, if you're a beginner, if you're basic and you don't understand, just focus on the red. Focus on finding out what these red things are, how they may impact the markets, all these different kind of things. And it shows you, even though I spend a lot of time on technical stuff, looking at the charts, don't mistake the fact that I look at fundamentals, at least on a basic level, to say, okay, cool, this is happening. Why? Because I don't want, for example, on Thursday, when I come back from my day off, God willing, okay, and I'm trading at 12 p.m, this information right here to basically affect my trading activity. Oh, I'm in a trade, everything's going fine, and all of a sudden something just happens. I'm not saying I wouldn't take a trade, but let's say, for example, it's 11:55 and I see a trade set up. I might say, you know what, let me just wait 5 minutes. Let me wait 10 minutes until this information comes out, and then I might take the trade. Or I might enter the trade and say, okay, cool. You understand that these pieces of data right here are actually coming out into the market, and they could have an adverse effect. They could have a positive effect. Okay. Now, let me say this. Okay. I'm not going to turn around and basically say that if I basically enter a trade at 11:55, okay, and the news comes out and basically now shoots my trade on the pound against the dollar, for example, into a loss after being up, I'm not going to now make an excuse and say, oh, you know what, it was this fundamental piece of data that came and took out my trade. Same way, you have to become you have to just be wise. You have to become more mature about this and say, you know what, this is me. I made this decision. I knew this was potentially coming out, and I still took the trade anyway. Don't make any excuses. If you win, you won. If you lost, you lost. Take complete ownership. It's something that will help you get much better. That's why when we get to stuff like the trading journal, when we're looking at this data, we're not making excuses. We're not saying, oh, this happened, that happened. No, we're taking ownership. I didn't enter the first trade properly. I entered the second trade properly and will continue to stay confident. I'm not going to make any excuses. Oh, because I lost the first trade, I was scared, and I could have potentially had that winning trade, but because of this, no. Don't fall into this imaginary situation. Literally be more mature about this. That's how you're actually going to get the results you're actually after. Okay, so we do that, we review, and what we do next is we basically go to the charts, because we've done our review now, and now we're basically looking at how the market is going to do what it needs to do, etc. And based on that, we basically turn around and we basically take a trade opportunity. So as we basically get ready to go into the charts, just literally give me 2 seconds. Let me do something quickly here, and then I'll basically get into it. Alright, so first things first, I'll do this quickly, looking at the calendar, not the calendar, the spreadsheet, the journal. Look, these are the currencies we trade in this particular trade setup. In Trade for You Incorporated, Trade for You Limited, whatever you want to call it. We trade the euro yen, we trade the pound against the dollar, we trade the Aussie dollar against the US dollar, we trade the euro USD, and we trade the USD JPY. So we're going to now look at these charts. We're going to now prepare ourselves for the week, and we're not going to be looking at any other charts. There's hundreds of currencies, hundreds of financial instruments that we could be looking at, we could be devoting our time to. But what's going to be more likely in regards to you getting success is you focusing on a handful of currencies and actually learning them and mastering them over time. How do they increase in price? How do they drop in price generally? How do you get to enter the market? How do you exit the market? How quickly do profits come? How slowly do profits come? It's so much harder to do that on hundreds of currencies, and I'm not opposed to that. I'm just more focused on how you can get consistent. And I know you can get more consistent by focusing on less variables than focusing on more variables. It's just logic in regards to probabilities, okay, and numbers. So let's do this. Let's go to the charts, and let's begin to now break this down. So let's start with the euro yen. Let's do this. Euro yen. Let's go. EUR, JPY. Let's start here. Okay. Let's start with the euro yen JPY. Alright, so the first thing we do is, this is a currency we're potentially looking to trade, and as you should know, let's do this. Let's get to real time. And as you can see here, the market is actually closed right now. But what do we do first? So we first want to go to a higher time frame, and I'm going to see, okay, what way is the market going? Okay, so far, let's zoom out a little bit. This is a daily going all the way back to 2019, the beginning of last year, and you can see that price has been moving down. I think that's actually quite clear for most people to see. Price has gradually been moving down, as you can see right there. Okay. If you have questions, at least at a bare minimum, you can literally put them in the chat window if you want. If I see them, I'll potentially try and reference them in some shape or form. Alright, so price has been moving down, as we can see. Now, okay, if price has been moving down since last year, this doesn't negate some of the other stuff we can see that's been happening. This doesn't negate this, that price moved up here. It doesn't mean that price doesn't move up, that price doesn't go in the opposite direction. I need you to understand that, just if you're a beginner. All of these opportunities here, there's still times when price moves up. Even in the midst of all of this stuff right here, you can see price has been moving up. But the overall move has been down. Okay? That's something for you to understand. Now, if price has been moving down overall, what do you think makes sense in order for me to do in regards to trading? If price has been moving down long term, I want to trade long term with the way the market's moving long term. Okay? Because I want the flow, the tide, as I like to say, as I said for years, I want the tide to carry me to where I want to go. listen, I'm not even going to get into what I was about to say in just a moment ago. Maybe at another point we'll talk about that. We do talk about this in the on-demand workshop though, just for the record. It's in the description box if you want to attend and watch that for free and learn how to trade the Forex markets like how I do. Okay, but the market has been moving down. If you can't see something from the daily, what you do is you go to a higher time frame and try and get a better view from that perspective. But I want to look for sell positions on the Euro Yen this week. Okay, I think the market's going down. So what we do, just for the record, is this is where I'm doing it. I've got just the information here, the currencies, and I'm writing, okay, what way is it going? I write this here and I say, okay, cool. The Euro Yen for me this week is down. So when I come to the market every week, I have the mindset, I say, you know what? I'm looking for a sell position. That's it. Simple. Why are we doing this now? Because the market is closed. Because this is unemotional. I'm just looking at a chart, a dead chart that's not moving, and I'm saying, okay, cool, you know what? Based on everything I can see here, the market's moving down. Just because the market's moving down, remember what I said? Don't forget about upwards movement. Okay? Don't forget about all of this stuff. But one thing I need to understand is, let's go down quickly. I want to show you something before we go back up. Look at what price has been doing the last couple of days. Price has been moving up. Okay, price has been trying to move up. It looks pretty much sideways, which at a bare minimum the price has been moving sideways. But I want you to understand that this has been happening. So what I'd be doing is, I don't like talking about charts after the fact. It's a pet peeve of mine because I don't want to lure you into false security to think, oh, it's as easy as doing this. Sometimes it is, sometimes it isn't. Okay, but this is why I have certain issues with backtesting. We was talking about, I had a conversation about backtesting yesterday, funny enough, to a certain degree with some of my brothers. But you want to look for areas. Okay, look, this is the 17th. See, price moved up. Dropped here. Notice how price is moving in the same region, dropping again. Notice how it's across the board. The same thing we did on the euro. Notice that. Okay. On the pound against the dollar. Notice how stuff like this is happening. So just bear that in mind. We're looking for sell positions. Let's go back up to a higher time frame quickly so you can see this in more detail, because I wanted to show you something. Look at this region here, where price stopped. This is where we're at right now. Look at this. This is where price decided to stop. Look back this way. What do you see? We see that the last time price was in this region, price decided to take off. Now is it a surprise that in this particular region here, right here now, what's going on is price is basically trying to bounce from this particular region. Is that a surprise? It shouldn't be. Look what happened the time before. Price shot down and came back up. So this is the kind of things you have to understand. Although I'm looking for sell positions, I'm focused on these kind of things that we can see. So if I take a sell position somewhere here during the week, this right here, 117.072, the 117 round number. I'm not going to talk about round numbers in today's stream. They came up last week's stream. I'm not going to talk about them again today. But in this particular region here, the red line, 117, I'll be mindful of that. If price decides to short through this region, and we're continuing to sell next week, then what am I going to do next? I'm going to turn around and say, okay, cool. let me go from a weekly perspective and see where's next. Maybe this region right here, 115, 200 pips lower. Why? Because what happened previously, the last time price was down here, price bounced. Notice what we're doing here. We've got our trade direction, but we're now looking, saying, okay, cool, how can we capitalize on it? Okay, now we go down. Let's look at a 1 hour chart and let's look at this. This is a nice snapshot of pretty much the last 2 weeks. And notice we've referenced it already, but we're in a sort of range. Okay, so we can see up here, price has been trying to bounce between these two particular regions. You can see that quite clearly. Down, up, down, up, down, up, down, up. We likely think it's going to go back down. Why? Because whenever a market is ranging like this, what you need to understand is price generally is going to break out, it's going to come out with the momentum. So remember, the momentum is coming from up here, down. Remember, we did that first. So we're going to be looking to find opportunities on the downside. You see, look, we did this already, we talked about this already. Yes, like you can make money on these opportunities. You definitely can. But they're more risky than selling here, selling in any of these regions, selling here, selling here, selling here. Why is that? If you don't know, the reason why it's less risky to sell is because the momentum is backing in our backing. So you can buy, I might buy, but I likely try to focus more on the long-term momentum and trading that way, because generally those profits are realized a lot quicker because you've got long-term momentum. Once it starts moving, it will move, and it's a lot less risky to trade with the overall movement from the market than to do the opposite. Okay, so just bear that in mind. So this is the euro yen, looking for sell positions. We've seen there's 2 levels. Notice that didn't stop price from breaking out on the upside and faking people out, where some people would be now basically saying, okay, cool, it's about to break out, it's going to the moon. But look, just like we talked about on the dollar, the pound against the dollar, the same thing happened. We'll just fake everyone out and then we'll move down back to where we're going. These are some of the tricks, these are some of the things, the manipulation you have to protect yourself against. Okay, so selling, this is a downwards region. Let me do this. I want to highlight this particular region here, and I want to say it's yellow because it's potential. And then let's move it backwards so the candle's on front. So this region right here, highlighted with the yellow box, this is the particular region. This is what you can call the potential money region. 116, 119.40. In that particular window is where we want to basically find an opportunity. We want to see what price is going to do the next time it comes into this particular region. If price comes into this region, even if it does something like this, even if it breaks out, tries to push up and then comes back, we're going to be looking to try and find an opportunity. That's what we're looking to do. Let's move this over. And that's the point. So we'll leave this on. This is the euro yen. Where are we going to be looking if we take a trade position? Where are we going to start to be a bit cautious? Where are we going to say, okay, cool. We don't want to necessarily take a position. We don't want to go beyond. Well, in this particular region right here, 117. This is a 250 pip difference. This is a 250 pip range. And in this region, we're saying, okay, cool. We'll try and take a trade in this position. Notice though, this is something to bear in mind. A lot of these times, what is price doing? Price is barely getting to the region. So if we're going to put a take profit on, I'm going to say I'd like to put it somewhere here. I want to put it where the body gets to. Yeah, that's potentially, this is a 50 pip window here. Just bear that in mind. This is a 50 pip region. If you put as target your take profit in this particular window, just bear in mind that price may move down the next time, but it may not hit these levels. It may crash down and stop. And I want to bank my profits. And if I can basically get into this trade with a good opportunity somewhere up here, then 20, 30, 40, 50 pips in the bigger scheme of things doesn't really mean anything. Because if I can get a trade up here, 119.30, 119.40, and the target can be around here, you're talking about potentially 200 pips. So 200 pips or 250 pips, I'll take the 200 pips that I feel is more guaranteed, because look, 1, 2, 3, 4, 5, 6, 7, every single time price goes up back to this region and now drops like significantly, it hits this region every single time. So it's not guaranteed in a sense, it's guaranteed, but it's guaranteed. Like, I'm extremely confident that if I can get a trade on, price generally would move back down to this region at least. It may move into this particular 50 pip window below, but that becomes a lot more risky, and that's something that I may not necessarily want to like put on the table. I don't want to put potentially 200 pips on the table just for an extra 50 pips. If we're talking about going from 2 to 1 risk to reward to 3 to 1 risk to reward, then I'd have to do that, obviously, to continue with my rules. If we're not talking about that, we're talking about the difference between 8% profit or 10% profit and 15% profit, then obviously I'll take the 8% profit and be glad and merry, etc. So just bear that in mind. This is the euro yen. Okay, so down. We can say 119.40 is of interest. 119.40 is interesting, and we can put to 117. 117. Then put in brackets. Excuse me. But 117.50 is better. Now, I feel this Alright, so it doesn't guarantee that I'm going to be trading in this particular window, just for the record. I need you to understand that. It's just that simple. Alright, so you have to understand this doesn't guarantee anything. Okay, simple as that. This is a legal disclaimer. Not financial advice. This is my own personal opinion. Not taking part in your profits, not taking part in your losses. This is all my personal opinion. We can write the key area for the euro yen that we want to trade from is around 119.40. We want to see what price does there, and then we're going to be looking to trade to lower levels at 117.0, etc. And we'll see how it pans out. So that's the euro yen. Let's go to the Aussie dollar. Okay. And let's look at a daily chart first and foremost to start this off, and you can see, so some people say this is hella bearish all the way down from 2020 starting. We've gone from 70 all the way down to as low as 55. We're talking about 1,500 pips, and that's a lot of movement. So what way is it going? Down, right? So first things first, we say Aussie dollar down. This is the way the market's moving. If I take a trade on the Aussie dollar, this is where I'm basically going to be trying to trade from as well, just for the record. Then what do we say next? We say, now that we know what way the market's going, let's now look at a lower time frame. And let's basically look at a 1 hour and see, okay, look at this. Price has tried to move up a couple of times over the last couple of days, and we need to be mindful of that. And what I'd say is, let's take this off, but this particular region here will be a really interesting level. It's not a guarantee, but 59.65, it's about 150 pips away. If price is moving in the direction, then maybe we may look for an opportunity there. But we want to get even more insights and say, okay, let's do this. You can see how price has basically been moving up. People that love waves, the Elliotticians out there are going to be talking about the way in the waves that it's actually moving up, etc. So when you think about it from that perspective, it will be a downwards position potential. We're going to just look and see what happens. Okay, I'm not as confident in this as I am in the euro yen for a potential trade opportunity. Now, again, this is a lot more well behaved. You can see the euro yen was a lot more like, there was longer candles, there were bigger candles. These are more shorter. It's moving down. You can see it's generally doing a lot, but it's different in a sense of how much activity it's actually doing and how it's actually moving these markets around. So just bear that in mind. But I'll be looking to trade this short. So why is this important? Why are we doing all this stuff in advance? I mentioned this earlier. We're taking all of the emotion out of it. We're just logically looking at charts and saying, okay, what way does it look like the market's going? And if it is going to go that way, let's prepare ourselves. So when I come to the market on Monday, Tuesday, third day, first day of the week, second day of the week, fourth day of the week, fifth day of the week, I've got my information here already saying, look, if you're trading the euro yen, you're looking for a short position because that's what way you think the market's going. If you're trading on the Aussie dollar, you're looking for a short position because that's the way the market's going. Can you see how this just makes sense and how it will help you become consistent if you follow this kind of stuff? Okay. Let's say let's just leave this and move on to another one. Okay, 59.65 is the kind of region. If price does some sort of setup during the day, which is like a high of a session or something like that, maybe we look for a sell position there. Let's go to the pound against the dollar. It's actually supposed to do this first, but there you go. All right, so this has been on for the last couple of days. I want you to understand that we're basically going to delete all the drawings. Why? Because that trade was in the past. It's a new week now. I mentioned this in yesterday's live stream. Like, I'm not getting carried away with yesterday's profits, last week's profits. That's done now. Let's move on. The analysis, it may work still, but we're focusing on something completely different now. So just obviously, just bear that in mind. So now, just like we did last week, we're going to do the exact same thing again. So what way is the market going? What way do you think the market's going? By looking at this daily chart, looking at the last, year's worth of trading activity on the pound against the dollar, which way has the market been going? Down, right? Does that change the fact, as we've explained previously, that price decided to do this, and price decided to do this, and price decided to do this? Does it change the fact that price decided to do all these things? No, it doesn't. But price has generally been moving down for the last year, and in the last week and a bit, price has generally been moving down. This is how we found ourselves capitalizing on good trade opportunities last week, or a good trade opportunity that we detailed here in last week's trade, this green trade here, which was the winning trade, a really good 13% profit. If we look at our last stream, 2 live streams from last week, the one before yesterday's, and it will basically break down those things in a lot of detail. Be very beneficial for you. Alright, so it's going down, we know that. Down, 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 down. That's what we're going to continue looking to do. Now, let's unpack this even more. Let's look at some of what's been going on. Prices continued to try and bottom out, but last week it also put in another region tried to put in another low. Now look at this. You'll see this better here. Notice this right here, the low of last week. Can you see this? The apex, or not the apex, the bottom of last week's first drop. Notice how it went here first the first time, and then every single time it didn't really come back. It was only now, after a couple of attempts trying to get lower, one here, 2, 3, 4, kind of 5, then it shot up. A lot of buying came back into it, then it moved back down and was able to come back down to this particular region before now shooting off again. So just bear that in mind. So it's put in this new area, and then what are we doing now? After Thursday, after we got that great profit, what did price do? Price now shot all the way back up. And what are people thinking? Yeah, it's over. But what happened? Price topped out here at 118.50, just above 118.75. Price dropped down to this particular region, 117.50, 100 pip window. And what did price do? Price shot back up into this region area, provided a good opportunity. And obviously our trading was done for the week because we hit our target, but this would have been a nice potential opportunity to now trade at least back into this window right here. I'm not going to break all of this stuff down even more as to why we'd go for this region and not go back down here, but we just talked about this in regards to what was it, the Aussie dollar, I believe, or the euro yen, whatever one it was basically talking about, oh, it's the euro yen, where is it kind of like guaranteed going to come back to? Well, it just showed you previously. It showed you on this drop. This drop isn't our trade because we don't know the market's going to move there. But when price comes back to this region, now we know, based on what happened previously, we have a strong opportunity to at least get a sell position. And likely what's going to happen is it's going to move down very quickly. Why? Because the first time it did it, it moved down very quickly. That is the insight. This is what I talk about in the on-demand workshop in the description box. Okay? But this is an opportunity. And even though it dropped down even more, just bear that in mind. So we're looking at this. It's the pound against the dollar. Next week we're going to be looking to sell positions again. We're going to have these areas again as of interest, 115 and 114.40 as areas. So we'll be mindful of those areas, particularly in regards to selling, etc. Okay. And it literally be about waiting. Don't be afraid to wait, just to see where the market shows us something like this. Gets to a particular region and says, okay, we're not going higher. Then we'll come back, put a fake breakout on the top, and then give you an opportunity to get in for a sell position, something like that. Again, this isn't financial advice, this is my own personal opinion. But that's the pound against the dollar. We believe it's going down. So we write that in our journal in just little notes. And whatever notes you want to put on top of it, we'll just add it if you want. Let's look at the euro. Euro USD. Alright. So now we look at the euro. Let's delete all the stuff the same way we did with the pound against the dollar because it's a new week. Let's go to the daily. And what way is the market going? What way do you think the market is going with the euro USD based on the last year's worth of trading? Down, right? Does this excuse the fact that price did this? Or this? Or this? Or this? No, it doesn't. we're looking for, okay, if price is moving down, where's price going to? We can't see it anywhere, can we? No, we can't. Okay. What do? Let's go to a higher time frame. Where's the last time price dropped to and kind of turned around? We say this region here. Okay. So price is at 106 now. This is, or 107, just under 107. On market close, this is 105. 105.38, 105.40 region is where price has basically decided to drop to in previous times. Okay, so we've got a target, we've got a potential region that we'd potentially sell to, and not try and just put a huge crazy target somewhere much lower. Why would we do that? Now let's start to unpack this. Let's go to, start with a 4 hour first. Huge amount of volatility. Look how tight that is. Can't even really draw it properly, but look how tight it is. Go to 1 hour. Looks a lot better. Gradually moving down. Nice trends. Those are zigzags. Sell off, come back. Sell off, come back. Sell off, come back. Sell off, come back. Sell off. Okay, lots of trends. So the euro, which makes sense, is volatile but heavily traded, the most traded currency out there, so it generally behaves itself a lot. It's like a more volatile Australian dollar versus US dollar opportunity. See how the euro yen was very erratic, very volatile but very erratic. You see how the Aussie dollar was, it was moving but not as quick. The euro is like a combination of those two. Behaved but also volatile because it's so traded so much, so heavily traded. So let's do this. Because this market seems to be trending a lot, let's just put a trend line on, a loose trend line, and see if we can scout out some areas. So this is based off price coming back to this region. Then, if for example price is trending, this is more likely where price would basically bounce from. A region like this, 107.50, which is about 50 pips up. So what do? Are we going to guarantee trade from this region? No. That's what a dummy would do. Yeah, when price gets to 117.50, I'm just guaranteed trading. No, I want to see if price is going to get into this region, and then what price is potentially going to do in this region. Okay, so just bear that in mind. So simple. We've got our level one, which is 150 pips away, if I remember correctly, based on our weekly analysis from the weekly chart. 105.38, we're at 106, 107 pretty much, so about 160 pips away. So we're not going to try and put targets lower than that at a bare minimum. but let's do this. Let's see. This is about 270 pips. This trend, this wave, this drop was about 160 pips. This one was about 200 pips. So generally these moves are about 150 to 200 pips. 150 to 250 pips. So kind of lines up a lot. If price does continue to trend and we can find an opportunity in this particular region, then we know that we've got a good amount of space to potentially find a trade opportunity on these particular trades. So just bear that in mind. Okay, so you're not going to be trying to the key area of buying momentum potentially is 160 pips away. So it can easily move to this particular area in the trend and then move back down, okay, and be well within that region. So just bear that in mind, okay. And then let's see. So this is the euro anyway, down. Let's write that in our notes. So every day I'm looking at the markets. This is what I'll be looking to trade. Now, this is a good place to segue to, not only to tell you to hit the like button, definitely hit the like button if it's giving you a lot of value, but the reason I'm saying this is a good way to segue off into is to highlight something. This is pre-market, okay? Pre-market, the market's closed right now. So the reason we're doing it in this way is so there's no emotion in it, it's logical. What is the market doing? Where it looks like a commonsensical, a common sense kind of approach to trade this market, bear that in mind. Now on top of that, this isn't subject to change. The same way I give the financial disclaimers, this is not financial advice, this is my own opinion, I'm giving you insights into what I might be doing, etc. And it's not even a guarantee that I'll do this. The same way I do that is the same way I'm going to disclaimer here and say, look, this is all subject to change, okay, subject to contract. So I want to see what happens in these regions before I make a decision. Price might just balloon up. There may be some huge news that comes out that says, okay, cool, no, it's time to go, it's moving up, and I switch it. This is what I may discuss in a live session during the week. You never know. But this is what I'm coming to from a logical perspective in regards to my mindset. This isn't just some emotional thing. Oh, the market's moving up and down, that's causing me to go a certain way. No. Let's look at the dollar yen. USD JPY as the last opportunity. Daily. So what way is the market going? From the daily, the reason this is a bit more tricky now. Why? Because price has been moving down. But look at also the amount of velocity so far in the last couple of days is pretty much wiping out everything that had happened previously. All of this is being wiped out by what's actually happening currently right now. Okay, so let's look at the weekly to get a better view. And now it becomes more apparent. We zoom out, look at this. Price shot down to these low levels and moved up. It's trying to move up. It's trying to move up. Moved up previously, moved up previously, moved up previously. This all started from this particular move. This all came out of this move up. The price has been moving up since 2012. So from that standpoint, what do? Okay, we say, do we ignore this? When we're looking at sell positions, what are we saying? Okay, does it negate the fact that price is going to do the opposite? No, it doesn't. Price may move down like this, but this is all coming out of price not going below this region right here, pretty much. So bear that in mind. The 102.50 was the region that price didn't want to go below. So we say this is a long-term upwards momentum, and it just kind of woke up in recent days to try and continue the upwards momentum. Now we look at the 4 hour, this is the opposite of what we were just looking at on the Euro USD in regards to the tight upwards momentum. Okay, let's now go to a 1 hour and see what this looks like in more detail here. You can see that we can adjust this a little bit. The price has been gradually going up. Last we know, in this particular region here, price basically wanted to kind of stop. And although this trend line isn't perfect, in like fashion, we'll basically look now and say, okay, let's highlight this region as the last place that price moved backwards. And generally what I do is, you could basically add to watch this, you can add a text, you can add an alert to this, and basically will alert you when price gets to this particular region. This is basically trading view. You could do this with MT4, this whatever it is. This I'm just using trading views for generally what I've been using going forward. There's a link for a free trading view account you can use to basically do exactly everything I'm doing here as well. Bear in mind there will be ads on that, but just for the record, this is what I'm using for anyone that's interested. Link in the description box. So, what's price been doing? Gradually move up, gradually move down, gradually move up, gradually move down, gradually move up. So we want to write that we're going to buy. And let's look at it's about 450 pips, 480 pips to be precise. And price sold off about another 480 pips, came back to the region. Then what do we see? A bit higher this time, about 570 pips. So in all honesty, what's likely to happen again? The next time price moves down, we don't know for sure, but about 500 or so pips, etc. So we highlight this region here. It's the 109.50 region, and we see, but price, as you can see, it's moving tighter. It may be more likely that price is just moving tight like this and doesn't go back to the trend line, so to speak, that we've kind of drawn on here, and it's somewhere up here like the 110.80 region, etc. So just bear that in mind. Okay, again, this is all non-guaranteed. This is just some of my thoughts. Dollar yen is up. We'll be looking for buy positions on this. We can say Euro's been downtrending. Dollar yen has been uptrending nicely. Okay, and basically what we've basically run through is just ultimately what we do on a week-to-week basis. Every single weekend, this is the kind of stuff we're doing. We're looking at charts like this and saying, okay, cool. Before the market opens, this is the amount of detail. I don't even know how long we've been going. We've been going for what, about an hour 53, so probably about an hour and 45 minutes. This is the detail. Obviously, it's taking longer because I'm explaining this stuff to you, but the point I'm making is this is the kind of effort you need to put into your trading in regards to reviewing the previous activity so you can become better next week. So I've got my notes here. This is what I'm looking to trade on these currencies. When the market comes, when the market opens, we're not going to be trading the Sunday open. From Monday, we're going to be looking at, okay, cool, what's this doing, what's that doing, etc. And this is the kind of stuff we do on the weekend to prepare ourselves for profits going forward. It's a good place to segue to the end of the stream. Definitely like this video if you've got a lot of value from this video. If you haven't already subscribed to the channel, share this with anyone you know that wants to trade, that wants to learn how to trade. Hopefully this has been beneficial for you. And we've got links in the description box for videos that you can watch after this that have been published on my channel as well. Hopefully that will help you as well. On that note, thanks for tuning in. I'll see you tomorrow on another live stream when we're basically talking about what's happening in the markets while they're open, potential trade opportunities, potential trades I may have taken already, potential trades I may take later, etc. All the best. Thanks and signing off. Just remember as well, you're just one trade away.